Hello, and welcome to our first video lecture for the course. Um, each chapter will have recorded videos like this. What I do is I go through the material that I think is the most important, so that way you get an idea of, A, what's important. Um, I also attempt to provide some expanded explanation of some of the problems, as well as some of the concepts that we're going to be talking about here. So at this point, hopefully you have already downloaded and printed your agenda, so you already know what the learning objectives are for the week, as well as what the activities are, what the assignments are for the entire week. You also should have downloaded and printed your study guide. You should have already read and attempted to answer a number of the questions that are in the study guide. What this video will do, hopefully, the idea is to reinforce some of the things that you've read, as well as expand on some, hopefully expand your understanding or increase your understanding of some of the concepts that we talked about or that the book um, talked about. Okay, so in this video, we're going to look at managerial accounting, right? So this is going to be an overview of managerial accounting. This coincides with the prologue chapter of, what do managerial accountants do? So by the time we complete this video, you should be able to explain the difference between managerial accounting and financial accounting. And you should also be able to list the 7 ways that managerial accounting and financial accounting differ. Now I'm going to give you a little spoiler alert. There's 7 ways that managerial accounting differs from financial accounting. Those 7 ways are the user, the time focus, verifiability versus relevance, precision versus timeliness, subject, rules, and requirements. So those are the 7 ways that managerial accounting and financial accounting differ. As we go through this video, we're going to discuss those 7 ways that they differ. Now, before we jump in, let's look at financial accounting. What is financial accounting? Well, remember, financial accounting is concerned with reporting financial information to external parties. That's it. Pretty simple. When we're talking about managerial accounting is concerned with providing information to managers for internal decision making purposes. So that's the main difference between financial and managerial accounting. Who are we serving, right? For financial accounting, hey, we're going to put together financial reports for external parties. If we're managerial accounting, we're going to provide financial information to managers. So then those managers then hopefully can make good decisions. So let's go ahead, excuse me, let's go ahead and let's look at the first way that these two differ, which deals with the user, right? So financial accounting. Financial accounting deals with external users. Who are external parties? Well, we're talking about investors, creditors, regulators, okay? Think about it. If we are an investor, we can either be a stockholder or we could be a bond holder too. Maybe we invest in bonds for a company just to generate some income, right? We need to make a decision on, should we invest in this company? Should we give this company money so they can use that money to hopefully make more money, right? We're going to give them money, they're going to invest that money in their operations, and hopefully they're going to turn a profit. In order to do that, we need good information. We are not insiders to the company, right? We don't know any insider information as far as what are their cost structure, how much does it cost them to make a product, what assets do they have. We don't know that. We need to learn that. We learn that through financial reporting. Okay. Same thing with banks. Banks want to know, should I lend this company money? Well, I need to know, how much debt does this company have, right? How much equity does this company have? Same thing with regulators. Security and Exchange Commission, they actually require trading or publicly traded companies to actually report yearly, at least yearly, on their financial position. Okay, so that's the first way that managerial accounting differs from financial accounting, has to deal with the users. Managerial accounting, again, managerial accounting provides data for managers, internal parties, right? So think of, maybe a production manager or a division manager or even the marketing manager, right? They need to make decisions about the company. They need data in order to make good decisions. So that's what managerial accounting does. It provides them with that data. So a managerial account, or excuse me, a production manager might want to know or might need to know, hey, how much does it cost us to make a unit of a product? Or how profitable is this product line that I'm managing, right? Managerial accounting provides that manager with that type of information or that type of data so they can make a decision on, is this division profitable enough? Is this product line profitable enough? Right? What if we change some of the cost structure? How will that impact the bottom line? Same thing for division managers, right? They want to know, hey, if we build a new plant or if we expand into a new territory, what impact will that have on our income, our bottom line? The second way that managerial accounting differs from financial accounting has to deal with the focus of time, right? So when you think of managerial accounting, their managerial accounting looks at the future. Financial accounting looks at historical costs. What do you mean by that? Well, what I mean is financial accounting measures and reports on past activities, meaning what happened, how much money did we earn, right? How much debt did we take on? How much debt did we pay? How much cost of goods sold did we incur in the past year? Okay, so financial accounting looks at historical costs for the most part, right? We want to know what were the actual revenues over the past year, right? How many units did we actually produce and how many units did we actually sell in the past year? That's the type of information that financial accounting provides. Managerial accounting, on the other hand, focuses on the future, right? It provides information so managers can make future decisions in the future, right? So what managerial accounting does is it provides data for managers to make decisions based on, hey, what happens if we change our cost structure? Meaning, what happens if we increase our variable costs or we decrease our variable costs? What impact will that have on our financial position? What if we change our selling price? Meaning, in the future, if we change our selling price, what will our financial position look like? How will it change, right? In the future, we have a decision to make. Should we make a component part of our product, or should we outsource that component part? Meaning, should we buy it from a supplier? Well, financial accounting provides enough data for that manager to compare and contrast those two decisions. Well, if I make the part in-house, it'll have this impact on the bottom line. If I outsource it and I buy it from a supplier, it'll have that impact on the financial position. Okay? So again, two main differences, or two differences that we talked about so far: users and time focus. Now let's look at verifiability versus relevance. What are we talking about here? Well, the data that accountants produce, sometimes it has to be verifiable, sometimes it needs to be relevant. When we're looking at financial accounting information, we want to provide data that is both objective as well as verifiable. What do you mean by that? Well, if any of you guys are old enough to remember Dragnet, just the facts, ma'am, just the facts, right? That's what financial accounting is all about. It's all about producing or creating, I hate to say that word creating, preparing data that is both factual and it's based on what actually happened. Okay? We don't want to know, hey, if costs change, what will this look like? Nope. We need to make a decision based on financial accounting information. We want to know what actually happened. Here's the actual sales that I had. Here's the actual revenue that I had. Okay? The second part of that is that it needs to be verifiable. What do you mean by that? Well, what we mean is information needs to be factual, honest, and truthful. And the only way that we can really get that is if we go through the audit process, right? So the information within financial accounting needs to be verifiable, and it is verified by an audit of an external accounting firm. Okay. When it comes to managerial accounting, we're focusing more on relevance, right? Because think about it, we don't care if for managerial accounting, we're trying to make future decisions, right? Yes, past information does help us out, but we want to look forward and say, hey, if we tinker with the numbers here, what's it going to look like? Okay? That's what managerial accounting is all about. So, the information that we provide to managers needs to be relevant, meaning it needs to make a difference in the decision-making process. Okay? The fourth way that we mentioned earlier dealt with precision versus timeliness, right? So financial accounting needs to be precise, right? Financial statements have got to be accurate, and they got to report on exactly, precisely what happened. Okay? So financial accounting reports, they take time, right? We have to be exact. We go through an audit process. Think about it. Most companies have a fiscal year, right? Meaning 12/31 at the end of each year, they report, right? They close their book, so to speak. They prepare their financial statements and they say, okay, here's exactly what happened, right? Auditor comes in and says, okay, let me verify what these numbers that you have, right? I'm going to verify the numbers. I'm going to look at all your accounting records, and I'm going to make sure that this is accurate, objective, verifiable, and this is precise information. That's financial accounting. Managerial accounting says, you know what? We need timeliness here. We need the reports now. We got to make a decision now, so we need the reports instantaneously. Because managerial accounting does not go through an audit, we can have those reports instantaneously. Call up our auditing department and say, hey, I need some information based on our cost structure. Not a problem. Here you go. Boom. So there's no audit process. It's only used for internal decision making purposes, and that information we get instantaneously. Now the next thing we got to look at is subject, right? Or focus. What we're talking about here is what are we reporting on? Okay? Financial accounting focus, or the focus of financial accounting, or the subject of financial accounting, is the company as a whole. Okay? Meaning, excuse me, the divisions, the segments, the product lines, all that financial information for each of those divisions, segments, or product lines are all mingled together, right? We put them all we put them all together, we aggregate them, and then we report. Okay? Coca-Cola. You look at a financial statement of Coca-Cola, revenue of, I don't know, we'll say $1 billion. Okay, well that's great, but where did this $1 billion come from? Meaning, did you get this $1 million from, your Coke line, or your Diet Coke line, or your Sprite line, or whatever other flavors that Coca-Cola offers? Or of this $1 billion, how much of it is related to your Georgia division? I don't know, because financial accounting, the focus of it is as a whole. Managerial accounting, on the other hand, focuses on a specific segment, maybe a specific product line, specific division. of a company. So managerial accounting, we get information for internal purposes to make decisions that are not aggregated. Okay, so you see here Georgia, if I'm pronouncing that right. Looks like it's like looks like an espresso drink, and looks like it's in somewhere in Asia, Pacific Asia. That's a division of Coca-Cola. Okay, so if I want to make a decision, if I'm a manager and I would need to make a decision about Georgia, should we continue this product line or should we get rid of it? Well, I need to make a decision based on that. If I use financial accounting, I have no idea what the sales are of the Georgia line or the expenses or what assets it has or what liabilities are associated with that line. If I have managerial information as an internal manager, I can make that decision. Hey, if we drop this Georgia division, here's how much we're going to lose in contribution margin. Here's how much of the traceable fixed costs we're gonna lose. Okay. Now I'm using some words that aren't in this chapter. These are things we're going to learn about as we go through the course. Okay. So again, excuse me. We're looking at the fifth difference between managerial accounting and financial accounting. That has to deal with the subject matter. Okay. Meaning company as a whole aggregated or specific product lines and divisions. The sixth way that financial accounting and managerial accounting differ has to deal with rules, right? Financial accounting must follow GAAP, generally accepted accounting principles. This should be familiar to you. You should have heard of GAAP when you had your financial accounting principles class. We're not going to get into GAAP in this class. Just know that GAAP governs financial accounting. Okay, GAAP is kind of created or administrated by FASB, the Financial Accounting Standards Board. When it comes to rules, managerial accounting rules, it says blank. What the hell did this guy do? Did he forget to complete his slides? No, it's blank because guess what? Managerial accounting is not governed by any rules. Whatever costs we want to include as part of our product cost to make a decision, we can. Whatever costs we want to exclude from the unit product cost, we can do that too. Now, as we go through this course, we're going to see the different costing techniques, and we're going to be able to identify what costs, or let me rephrase that, which technique includes or excludes certain costs. Okay. And then the last way that managerial and financial accounting differ have to do with the requirement. Financial accounting is required, managerial accounting is not required. So what I did here was put together the differences. Actually, I stole this from the publisher slides. The difference between financial accounting and managerial accounting. So if you see there on the left, we have the 7 ways that managerial and financial accounting differ: user, time focus, verifiability versus relevance, precision versus timeliness, subject, rules, and requirements. And then we went through and talked about each of these categories and how financial accounting differs from managerial accounting. Okay, so hopefully this video was able to expand on the reading for you and provide you with maybe a little bit of examples. Hopefully it also helped you with your study guide. Maybe there were some questions in the reading that, I don't know, maybe kind of missed or whatever. That's okay if you did. We have this lecture video, and hopefully that brought some of those aspects out. Now when we come back, we're going to dive into chapter 1, and we're going to talk about how do we categorize costs, which is very important. So please tune back in for that video.